In this week's episode of the Stockscores Market Minutes, I'm going to show you how to trade channels, something that was quite important this past week. Then I'll do my regular weekly market analysis and the trade of the week on DOMO. Alright, so how do you trade price channels? Well, what is a price channel, first of all? When the market is trending up or down, it tends to move between an upper envelope and a lower envelope, something we call a price channel. When price rallies to the top, it tends to get stuck. When it falls to the bottom, it tends to bounce. And therefore, understanding price channels can give you good entry points on the long and short side. To draw a price channel, simply draw a line across the tops and then draw a parallel line across the bottoms. For an upward trend, I tend to draw the line across the bottoms first and then draw a parallel line across the tops. In doing that, you have defined the price channel and you simply look for opportunities to trade when it rises to one extreme of the channel. So here we have a price channel and you can see I've drawn a line across the tops and a parallel line across the bottoms. So on Friday, for example, when the market gapped down on the open and there was a general feeling of panic, a lot of people very pessimistic about where the market was going to go, I was actually a buyer of stocks on Friday morning because it felt like the market would bounce off of the bottom of the channel, which is exactly what it did. Then it rose to the top of the channel, got stuck, and rolled over, and I exited those stocks that I had bought before the end of the day because typically I would hold until the end of the day, but on Friday I did not. I sold early, and as according to plan with the price channel, the market dropped off and went down to the bottom of the channel where it again bounced. And you can see throughout the week that pattern behaved quite predictably. And the reason it's important is because your emotions will be the opposite of what the price channel is telling you to do. The general feeling Friday, for example, was that there was some panic on the open as the market gapped down and a lot of people were looking to sell stocks. But because price had fallen into support at the bottom of the channel, it was actually a time to be a buyer. You don't want to hold those buys long because when price hit the top of the channel, it was time to sell. So channel's a very important thing to keep an eye on. All right, let's get into this week's analysis looking at the US markets to begin, and of course the S&P 500 is where I always go first, so we'll bring up a chart of the S&P 500 in the Stockscores website, symbol SPY. And let's start with a 1-month chart to get the short-term view. And you can see that in the context of the 1-month chart, we are still in an upward trend, although for the last 6 or 7 days we have been trending lower. And that means the market really taking out some overbought condition in the market. Now notice that we have retraced from a high. We have not made a falling top. And the fact that the market has not made a falling top is important because typically reversals come after the formation of a falling top. So let's take a look at the 3-year chart and just see how that looks there. And that's where you can really see that the market is coming off of all-time highs, not off of a falling top. Now the long-term upward trend is still well in place. We're actually still a little bit overbought given that we're still quite some distance above that upward trend line. On a shorter term time frame, we're perhaps retracing back to that upward trend line. So I don't yet feel like there is cause to be very pessimistic long term. Now if that steeper short little upward trend line that I drew gets broken, then we might see more weakness bringing it back to the longer term weekly upward trend line. And typically in September you do have weakness, so that could be what is in our future for the month of September. Wouldn't be a bad thing. It takes out some of the buyer enthusiasm, resets emotion, and ultimately recharges the buyer interest for the continuation of the long-term upward trend. So near term I remain bullish, but we should be cautious. If that short-term upward trend line is broken, then we probably pull back to the longer-term upward trend line. Let's take a look at the chart of the Russell 2000 IWM just to get a sense of where the small caps are. I'm going to make this a 3-year chart. And there again you see that the upward trend is certainly well in place, and even the steeper upward trend is in place. And so much the same comment as I had on the S&P 500. The buyers are in control. Yes, we could threaten the steepest of the upward trend lines, which would probably bring a pullback to the longer term upward trend line, but until it happens I wouldn't get too worried. Just be somewhat cautious because September does tend to be a weak month. All right, let's take a look at the Canadian market, starting off with the Toronto Stock Exchange, T.XIU. We'll make this a 1-month chart to begin. And here you see that there's a little bit, well not a little bit, a fair bit of emotional selling. Notice that I've drawn a curve across those tops, and that shows that the pace of the decline is steepening, and that happens when investors are getting emotional. We've of course had a fair bit of worry, if you will, about the state of the trade negotiations going on between the US and Canada, and that's of course very important to both countries, but probably more so to the Canadian market, and that is setting up for this, sharp selling pressure that we had this week. I wouldn't say that it's real sharp yet, but until that is broken, that downward trend is broken, I'd be pretty cautious with Canadian stocks. Now, it could reverse very quickly if there is a favorable outcome in the NAFTA negotiations. You're going to see this market probably snap back fairly quickly, but until that happens, don't get too optimistic. Looking at the 3-year chart, not really bad news here. We are in a long-term upward trend. We've run away from the trend line. We're pulling back to it. Pretty typical, but for the course of the last year to 10 months, we've more or less been going sideways, and that makes us kind of a neutral market right now, one that could quickly go back into its long-term upward trend if things work out with NAFTA negotiations. But until it happens, we're not going to get a break of that pullback trend line, and therefore remain somewhat cautious. Let's take a look at the TSX Venture, which is Canada's microcap stocks. And we have a heavy weighting of cannabis stocks here, and of course there's been a good deal of action in the cannabis space, and that's really what's propping up the TSX Venture. Energy is pretty dead, mining is pretty dead, and that's why we are generally in a downward trend. And really all of the strength that we've had in the last month or so, maybe 3 weeks, has been from the cannabis sector and related areas. So generally it's a market where you want to be a stock picker and not generally buy these stocks, because commodity prices generally aren't doing all that well right now. I mean, oil's okay, but the speculative oil market tends to be pretty quiet in the summer. It will typically pick up in November. Mining is dead because gold prices are low. So until that reverses, I think you're really going to see this being a one-sector market, and that is cannabis, which I would argue is pretty overextended in some ways with the emotion that we see in a lot of those stocks. So you want to be fairly cautious with chasing that sector higher. All right, let's take a look at treasuries, which tells us the direction of interest rates. I like to use TLT as my proxy for that. Let's make this a 3-year chart. And I've talked about this in recent weeks. We're really just stuck in a sideways range, relatively low rates. We pulled back this week, which meant rates went up a little bit, but until we break down through support. So we can draw a quick line across the bottoms here, and you can see that we are still above that important area of support. Until we break that area of support, I wouldn't get too concerned about rising rates, and we're just going to kind of bounce along in that range for the next little while. All right, let's take a look at gold, GLD. Try that again, I entered the wrong symbol. Here we go, GLD. And daily chart, long-term downward trend, therefore remain cautious until that trend line can be broken. But we're building a little bit of optimism near term, perhaps, that will lead to a break of the trend line. I wouldn't get too optimistic about gold until we actually are able to break that downward trend line. But at least we've taken out the oversold nature in the gold market. Finally, USO, important chart for investors in energy, of course. This is the chart of oil, and stuck in this sideways range, building what we call a pennant pattern, where volatility is diminishing with each swing up and down. We're diminishing in volatility, but until we break out of that pennant, I think it's going to be a little bit of a sideways market, building a base. The long-term trend is still up. Looking at the 3-year trend, you can see that our trend line is still certainly up, and until that gets broken, I wouldn't get too concerned about it, but for now, looks like a market headed sideways. So my ratings then, bullish on both time frames for the US market. Canadian market's a little less enthusiastic. I am neutral long-term and bearish short-term, but again, that could change very quickly. Gold continues to be bearish long-term, neutral short-term as it is trying to stabilize. Oil, bullish long-term and neutral short-term as it trends sideways. Thus far, recent weakness in US stocks is really just a pullback from being overbought. We should only get defensive if the upward trend line is broken. Canadian stocks are lagging, but that could turn very quickly. Gold is stabilizing, but still in a downward trend, and oil appears likely to go sideways. All right, let's take a look at the trade of the week, and this one is one where I broke my rules, because typically when I buy a day trade, I'll hold until the end of the day. I bought this on the open on that pink dot, which is what I call my Stockscores action candle, and it rallied quite nicely, went up 6 reward for risk elements, which is a nice trade. But I jumped out when that upward trend was broken, and it was largely because that's about the time that the S&P 500 had rallied to the top of its channel. So because the market opened weak and it rallied into resistance at the top of the channel, it felt to me like I should just take my money and run. And I sold all of my positions. Didn't have many, I only had 6 on Friday, but I sold them all into that rally, into resistance, and it turned out to be the right thing to do. You can see what happened with DOMO as it really fell off with the break of the upward trend line right about 10:45 on the 2-minute chart there. It rallied, pardon me, not rallied, fell into the close and ended up making a pretty significant reversal where it went from being up 6 RR to actually closing down about 7 RR. Well, hope that you've enjoyed this week's Stockscores Market Minutes. If so, click on that like button, hit the subscribe, and most importantly, trade well.